Hello, ladies and gentlemen. My name is Raitis and welcome back to Farewell Total Return Investing and Trading. I hope you're doing all great. Today, we're going to do our evening commentary and our weekly outlook for this NFP week, ladies and gentlemen. It is the 31st of March, and we're gonna get right into the analysis. It's already late for me. I'm gonna go to sleep very soon after this video. Now, we start off as usually with DXY. We're gonna go through all of the asset classes real quick and outline our expectations going into the next trading day as well as going into the whole trading week. On DXY, you can see we are currently this monthly candle traded lower, massively traded into the busy high, and we're currently rejecting that level. We have a bearish weekly order block potentially, okay? Ladies and gentlemen, if we close and trade it below this order block, this is just an anticipation, and I already extended the line throughout this level. This, of course, is also potentially a bullish order block, which the market traded into at the opening of the week today on Monday and rallied higher. And you can see we're kind of trapped. We traded lower initially into the busy weekly busy and below the low. Rejected, market trades higher into weekly inversion for value gap coupled with a monthly level. Wicks hard to the downside, closes bearish, and now we're kind of stuck between this range. I think this is still only a retracement with the rejections, and we can see more downside on DXY. Of course, today we saw a bullish displacement back into the daily fair value gap city low right here and into the consequent encroachment of this order block. We didn't hit that level yet, but we have a 4-hour bullish order block, bearish order block, excuse me. And yeah, DXY is currently selling off at the moment from this also 1-hour fair value gap. Look how nice the market respects this level. So let's see if we can see some more downside going into the week. We had no news releases, so all this run was engineered without any news release. So this could be valuation by speculation, ladies and gentlemen. So listen and pay attention to that closely. This could be the protraction for the week before we continue the rally lower. This is a potential scenario for DXY. Now, T-bonds traded down into the monthly fair value gap CB high. And market, as you can see, looks kind of bullish as we are not closing below this weekly fair value gap. You can see last week we wicked crazy to the downside, took out the sell side liquidity, wicked back into the range, and now we're hanging in there. Of course, we're rejecting also a premium array. So basically what it is a trapped order flow in the daily time frame. We have no clear narrative. Yes, yesterday on Friday last week we had a massive bullish candle which closed above the SIBI consequent encroachment, which is a very bullish sign, and we expected higher prices on T-bonds, and we saw that going into the start of the day, traded into the rejection block and a monthly level, and then saw displacement lower from that. There's some distribution, and the market is trading into the volume imbalance and seeing more upside again. So T-bonds, if we're going to be bearish on DXY, T-bonds of course will rally above the buy side, and we can see the short-term T-note futures have the fundamental strength. Oh yes, Euro USD, a lot of lines on the chart, but basically you can see I'm bullish on that. It looks like this was just a minor retracement after we took out a long-term liquidity pool, and you can see we traded into the bullish daily order block and now rejecting back higher again. So this is it for our order block. So this could be really valuation by speculation, trading below H1 low on this place, in this case, into a higher time frame level, and this looks very neat for continuation higher. But let's see how tomorrow's trading will resume. GBPUSD looks more weak. We have a bearish candle because euro GBP is bullish, euro is strong, and pound is weak. That's why euro GBP is bullish today. And yes, we're trading from this weekly breaker high currently. Let's see how far the retracement will go. We can trade back into this daily fair value gap. Very crucial level going into this week. We'll be monitoring that closely. This is a SIBI actually. So let's change that. Daily fair value gap SIBI and this place. Yes, perfect. So we could actually extend further into the daily fair value gap and then probably sell off. Let's see what tomorrow brings with us. Let's see. Now let's quickly cover the indices. Last week was absolutely beautiful, ladies and gentlemen. We saw the weekly high print at the weekly volume imbalance as anticipated, and then we formed the high of the week right there on all of the indices, equities, and YM. Beautiful, beautiful. And we saw then displacement higher going to the second portion of the week. Displacement lower and going to the last portion of the week. And this week we already took out a short-term target objective, which is why I probably assume that this week, coupled with the fact that we have NFP this Friday, this could be low probability, ladies and gentlemen, because we again took out on Nasdaq, we even took out a long-term target, and this is really, it will be really interesting. Okay, so we have this daily SIBI here. We don't want to see closure below the consequent encroachment of this level, and this will be very, very interesting on how we play out this week. YM is the leadership asset for longs, and Nasdaq is the leadership for shorts. That's what I also wrote on my trading plan for my weekly outlook. Let me quickly, for the daily market structure analysis, so yes, we have a low probability filter in this case, as for NQES, we meet a NQES, we have met a short-term slash long-term target. Of course, in this case, what we do is zoom out on a daily time frame and look for next level of where institutions could accumulate new shorts, and in this case, it's the bearish fair value bearish order block or this fair value gap. So this is the most logical place from where we could see continuation lower. This is my expectation. For that, we don't want to see closure above the 50% of the SIBI, and that's the game plan. We have a breaker block right here, market trades today into that, and we could see tomorrow open up. Tuesday print the high of the week in this side, this daily fair value gap, and then trade lower. This is my only expectation I really have or this is my only high probability expectation for the equities for this week. Otherwise, I think it will be a very, very, very slow week. And we have to live with that, and we have to navigate also the difficult market conditions, because we have also NFP. This week we have, where do we have it? NFP, non-farm employment change and unemployment rate. Today, no news again, as I said, valuation by speculation on dollar, potentially. And Tuesday, new month and new quarter, ladies and gentlemen. We have some news at 10 a.m. ISM manufacturing PMI numbers, very pretty important, I would say. And then Wednesday at 8:15, ADP, non-farm employment change. Thursday again, because it's the day before FOMC, NFP. It is probably low probability, and yeah, it will be very interesting how we trade there. But I think Thursday and Friday I will avoid completely. It will be interesting. Um, Probably Friday, completely avoid it for sure. And Tuesday, let's see what tomorrow brings. Wednesday, let's see. Thursday, I'm a little bit skeptical. I will probably be on the charts for Thursday, and Friday will completely take a break, as we should do for NFP. We don't want to end up inside going on a tilt in NFP days. That's for sure. And what should I say, ladies and gentlemen? Let's see, we're going crazy on equities, a lot of volatility coming into the market. Finally, left the whole consolidation. Now we are in a sell program right here, and I think we can see much more lower prices on the indices, equities, and let's see if dollar can continue its bearishness this week, if foreign currencies can rally, if T-bonds can also rally, and if equities can sell off. Gold, finally, final asset for this weekly outlook and evening commentary. We're 11 minutes in, and that's great. It's not a 20-minute video. Absolutely bullish. What should I say, ladies and gentlemen? Let's see what the next fib projection is. Standard deviations. Okay, next target level after the 3000s, which you're aiming for, is 3150. Okay, this is our next major level. I will outline this level here, or let me do that actually on the futures, because this might be more accurate in terms of analysis. Let's see where we have that. So it's even 3200. Okay, this will be our level. Let me switch the coordinates. Oh no, 3200, not 320. Perfect. This is our fib projection. This will be our target, and let's see if gold can reach up into that. We're pretty close to that, so it should be a realistic target. Nice bullish order flow. Yeah, really tricky. Let's see if we can get onto a move. We're seeing displacement from this key hour time frame level, so that's okay. Let's see. I don't expect the market to trade down into this daily fair value gap whatsoever. I think we will just completely continue this crazy rally this week. So let's see. This wraps up, ladies and gentlemen, this weekly outlook, evening commentary, and we have our expectations set. And equities will be tricky this week, but I'm gonna give you an update on Discord if we're gonna trade tomorrow, if I will be looking for some setups. I will be definitely on the charts, but if we're gonna take a trade, it's up to the market and the conditions it provides to us going into tomorrow's trading session. With that said, ladies and gentlemen, keep your trading plan up this week. Follow your model, journal, reflect, get better every single day. 1% better, one step ahead of of the game, of yourself, of your future. No, sorry, of your previous self from yesterday. Be 1% better every day, and over time you will see amazing growth. With that said, ladies and gentlemen, stay safe, trade safe. Bye bye.